Good afternoon. It's always hard to be the last or second last of the session, yeah? But this is a very interesting topic for us to cover. And just a little bit of introduction. Good afternoon, ladies and gentlemen, our distinguished speakers. As you can see, today's sustainability is a core of the ESG agenda and a global concern to preserve natural resources with the objective to reach net zero by 2050. Banks and investors alike can find opportunities in revisiting their strategy, business models, and products within sustainability finance whilst ensuring business resilience. Central banks are also actively examining the challenges and opportunities of sustainability for their monetary policy, financial stability, and supervisory functions. Both innovation and investment are critical to ensure climate change mitigation and transition. Ladies and gentlemen, we have 4 panelists today. Unfortunately, we are not lonely. I just have one of our panelists here, whilst the 3 others will be sharing with us their thoughts virtually. Yeah? And in order to smoothen the process, we'll have their presentation first and followed by the question and answer when they have done their presentation. Without much ado, we call upon the first speaker and who will be presenting to us virtually is Datuk Noripah Kamso, a lady that all of us know. Without much introduction, she's being a veteran banker, also fund manager. She was formerly the chairman of Bank Rakyat, and currently she is a member of the Malaysia Sustainable Finance Group. She will address us from the asset investment management perspective. And without much ado, may I invite Datuk Noripah to give your presentation. Thank you.
Thank you very much, Datuk Moderator, for the kind introduction. Good health, everyone. Health is wealth today. So considering I used to lead a global investment management outfit, my topic today, as you can see on the screen, will differ from the other 3 bankers. I will focus on the impact of sustainability practices in enhancing shareholders' value. This will be from the perspective of global institutional investors using big data, algorithms, and artificial intelligence. So the content is going to be broken into 4, as you see on the screen. Now, before that, let me just ask the audience, who here are here as employees of public listed companies? Or who are here as shareholders of public listed companies? So whether you are employees or shareholders of public listed companies, my goal for the next 10 minutes is to make sure you're aware that your ESG practices will enrich you, your wealth, enhance your shareholders' value as shareholders. So ladies and gentlemen, when we talk about investing, the sexy images that came to mind is financials like revenue, earnings, profit, market share, valuation, CAGR. But now ESG joins the rank. ESG investing is not ESG if we don't offer a glimpse of how your daily life can impact ESG investing. Now, if you look at the first content there, is your daily ESG impacting your share prices? Let me ask you these 4 questions. Now, do you know that as employees, your behavior, mannerism, what you do, what you say, even your emotional status have impact on the price of the shares you own? Today, employees use artificial intelligence, machine learning, and chatter media like Instagram, Twitter, of which sentiments are captured from the chatter. So If we take Tesla, for example, even with headlines on its innovation on electronic and driverless cars, internally, the mood is getting sour. The unrealistic stretch targets of long working hours is weighing on employees. And this proceeds to stock price. So sentiments of employees can lead to fall in stock prices. How do you know that how you treat shareholders, communities, how you align towards humanitarian causes, United Nations guiding principles on human rights, labor rights, workers' welfare, corruption, and global supply chain will impact your share price? Today, we are not just taking care of shareholders' activism that was covered just now in all the presentations, but it's more of stakeholders' activism that is now at its peak. Stakeholders are not just investors, public, employees, and customers. It includes regulators, activists, unions, government, media, parliament, NGOs, civil societies, and local communities. So case in point on stakeholders activists are seen on our home ground plantation companies, for example. CIMB is a plantation company, or glove company, Top Glove and Supermax, or electronic companies, ATA, IMS, and Dyson. They are all alleged. I repeat, they are alleged by activist shareholders to have practiced forced labor. They are alleged to have breached human and labor rights, impacting the global supply chain. Now, this is the S in the ESG, and as you can see, has caused share prices down. Now, do you know that what you eat or behave at dinner and lunch table will impact your share price? By you eating meat or fish or vegetables, it reflects on how you treat the planet, the beings on the planet, the air, the river, the sea, and the environment. And this is the E in your ESG and impacts the share price. Finally, do you know that all the good news or bad news or allegations that are lingering in the big data in the clouds in universal space will be used as permanent data for rating, scoring, and pricing your shares? Now, be careful with public opinion because bad news has compounding impact on investors, which impact negatively on your share price. The second content, past and present, sustainable investment is not new. So having taken a peep into how ESG is impacted by our daily life next. So let's quickly take a quick step back before we journey on sustainable, responsible investment. Sustainable investing is not new. In 1980s, we started with SRI investing, S for socially responsible investment, and then ethical investing, and then responsible investing. All these use proprietary negative screening, which means investors don't want to invest in companies that do harm. Example, weaponry and nuclear weapons, alcohol, gambling, animal testing, and so forth. So when shareholders activism strengthened in 1980s, then Islamic investing, which is part of ethical investment, became the fact. Now, here is a book on Islamic investing I authored in 2014, published by Wiley of New York. Then came impact investment, which measure impact on your CSR initiatives on social, environment, and financial returns to the investment. It's a big thing in EU. Impact investing came alongside Islamic investing in the last decade. So today, sustainable and responsible investment is not new. Today, with multiplicity of disclosures, all are consolidated into a globally disciplined, standardized mainstream investment language called sustainable, responsible investing. And it's no more proprietary based. The main refinement is setting global baselines for sustainability standards by integrating ESG, United Nations Guiding Principles, and United Nations Global Compact, I saw Fairuz is there, into its investment processes with an overlay of machine learning and artificial intelligence on data. Never has investment management been so blissful yet complex as today. The third content is on core parameters of the benchmark and the global asset under management. So how do we benchmark this investment performance? The SC chairman mentioned this morning, investment performance are benchmarked by a basket of equity indices, or if it's a debt, by bond indices. So whilst previously we used to have SRI index, ethical index, Islamic index, but now investors measure by using parameters like sustainability index and carbon index by global index houses like MSCI, S&P, Dow Jones, FTSE, example, the Bursa FTSE for Good index, The methodology of these indices are designed to identify listed companies whose core business practices sustainability. So what is the size of sustainable AUM? Without having to bore you with what you can find in Google, quickly, sustainable investment grew exponentially by over 50% in the last 4 years. And the asset under management as at 2020 now is US dollars 35.3 trillion. It is estimated to hit US 53 trillion by 2025, which is a third of the global AUM, asset under management. So ladies and gentlemen, how did this happen? How can it grow so fast in so short a period? Here is something that may surprise you. The institutional investors are the X factor. Why? Answer is they have lots of money. Yes, lots of it. It has firepower. Firepower will explode if institutional investors, example EPF, which has 250 billion US dollars or 1 trillion ringgit, or QAP or SOXO, insurance company, or Bank Negara integrates ESG into the investment process. Note that while pension houses in Japan, Norway, South Korea being top 3 largest in the world, Malaysian EPF is the 12th largest in the world. And there's also global fund managers like BlackRock that has got 4.8 trillion euro asset under management, Vanguard, State Street, and Fidelity. So what if they use the firepower to allocate more investment of funds to companies that work the hardest? And that is exactly what these pension houses and asset managers as leaders in setting the tone at the top at the institutional investor space is pressuring the public listed companies and the multinational companies. So institutional investors are willing to sacrifice short-term gains for long-term. Fourth and final content, the investment logic, is it performance? The world is changing, as you can see. We worry that investors are not paying enough attention as the drivers of these challenges. It's reckless to ignore this. Why? Because doing so can jeopardize future and long-term returns of the company, which the other 3 panels will share, and previous panelists has also highlighted. So investors invest in companies that uses ESG to drive hard business results. Now we have understood that the firepower in sustainability leadership rests with not only banks, but also institutional investors. Mapping that against what we already know on population that is growing and aging, population that will reach 10 billion at the end of century, it's rather scary, isn't it, to note that natural resources will deplete faster than can be replenished. So with the depletion, there's economic issues. Combining both ESG and economic makes investment sense to risk and to returns. So when we talk about investment, we talk about risk and return. Sustainability means combining ESG factors and financial factors into the investment process. And that's the holy grail of institutional investors now, which makes me wonder, and makes you wonder, I'm sure, are the investment rules of today fit for tomorrow? Is the meaning of ESG just achieving net zero by 2050? Yes? No. The S or social cannot be taken lightly. Like the securities chairman mentioned this morning, the writing is on the wall. It reflects humanitarian causes under human rights and labor rights, inequality in human capital, employee engagement, and workers' welfare. These are rights affecting global supply chain. Failure in global supply chain means failure of the license to do business, period. And the G emphasizes governance in global best practices. This was highlighted by Tan Sri Wahid as well as the chairman this morning. The G being an oversight role by board and investors, board governance and board sustainability and board diversity. So institutional investors has very high expectation on PLCs to practice in the S and the G. So you would have deduced from the example I mentioned on CIMB, Top Class and EMS earlier, with ESG, a new group of influential stakeholders who feel like it's core to their duty has intensely entered the mainstream. Who are they? They're not just environment teenage activists like Greta Thunberg, but these are other global activist shareholders and NGOs and civil societies. They're environment activists, social activists, and governance activists. And we have got one very powerful activist in the audience I saw just now. Now, that has influenced sanctions and havoc to global corporates in the global supply chain and has been able to muscle through Parliament in UK, US, Canada, Australia, New Zealand to change humanitarian causes into statutory law. So these are new legislation or law on human rights sanctioning companies that practices forced labor, child labor, modern slavery, impacting global supply chain. And if it breach, it can close down business, period. So ladies and government, does company in sustainability do well financially? Can I have the slide, please, on the chart? The chart, the answer that may surprise you is yes. The data shows that stocks with better ESG performance perform just as well as others. The blue line tracks MSCI's sustainable impact and in March 2020 clearly outperformed the MSCI non-sustainable. It outperformed significantly by 13.75% for the period November 2015 to January 2022. So, ladies and gentlemen, if returns are same or better and yet the planet is protected, don't you think this makes investment sense? I used to speak to a lot of global institutional investors from my previous life, institutional investors like CalPERS, with asset under management of US 244 billion being pensioned for public employees in California and the second largest in the United States. Today, it is core in their duty moving towards 100% sustainable investment by systematically integrating ESG across the entire fund investment process. Why? Because they believe it would provide long-term superior returns. And I relate their holy grail to what Mark Twain said, plan for the future, because that's where you're going to spend the rest of your life. So ladies and gentlemen, in conclusion, haven't listened to me, here's my question to you. Is the investment role of today fit for purposes of investment for tomorrow? That's soul searching for you. I will end here. Thank you very much.
Thank you, Datuk.
Moderator.
Thank you very much, Dr. Noripah. There's just a very quick takeaway when she's stressing on the investment management responding to ESG and the issue on sustainability. And very best is the impact on ESG which have on the share prices. Yeah? And talking about the impact of performance returns between sustainable and non-sustainable investment. On that note, may I invite the next speaker, which is Ms. Tan Aileen. She is the director and senior banker and head of investment banking from OCBC Malaysia Berhad. Good afternoon, Ms. Tan. Welcome to today's session. And I believe you take 10 minutes to give your brief presentation, please. The floor is yours. Thank you.
Good afternoon.
Okay, yeah, we hear you.
Good afternoon, everyone. Good afternoon, can you hear me?
Yeah, please go ahead, Ms. Tan, we hear you.
Okay, thank you. So sorry for that. Good afternoon, ladies and gentlemen, and thanks, Datuk Masna, for moderating this session. So sorry I couldn't be there in person due to conflicting schedules. And my sincere appreciation to the organizers for the opportunity to be part of this esteemed panelists. Datuk Noripah has actually set a very good tone, in setting the platform to discuss about capital market in general. I mean, starting with sustainable investment. I will go into more about sustainable finance market. So maybe if I could take the first slide, if you could share the first slide. You can see this is the trend in terms of the sustainable finance market globally. And as you can see, there are exponential growth in the adoption of sustainable finance globally as of now, right? Total volume of sustainable debt has surpassed US dollar 1.6 trillion in 2021 alone. And from what you can see, actually most of the financing come from the green financing angle, where to finance green-related projects in the renewable energy space. While climate change is indeed a critical issue, sustainable finance should also be seen as an enabler to address other issues such as social development, corporate governance, as mentioned by Datuk Said earlier. Other than renewable energy, the real estate sector has also gained strong momentum with the increasing investment into sustainable building and township. Closer to home, the real estate sector has been the mainstay for this category in Singapore, with over 45% of total sustainable financing raised. So in total, it is estimated that the required capital spending globally will exceed a mind-boggling figure of US dollar 150 trillion up till 2050 to achieve the net zero target. So obviously, given this kind of amount of investment that is required, there are a lot of opportunities for both the institutional investors as well as financial institutions, how we can support the move towards net zero eventually. As you can see from the chart, sustainability bond and loans, which top section in the last 2 years and recorded the fastest growth in terms of volume. The key features of a sustainable financing is the predetermined sustainability KPI being set upfront to the borrower to meet as part of the financing terms. To ensure that such structures meet its ultimate sustainability objectives, OCBC has actually pioneered a carrot approach whereby companies will be incentivized to meet the KPI when lower financing costs, and vice versa, they'll be penalized in the form of higher financing costs if they don't perform if they perform below certain benchmark. I wish to highlight that this is definitely not the case in the international markets. So the borrowers and the corporates in Malaysia do have a good right, for now, because in the international market, there is only penalty if the KPIs are not met. It is taken for granted it is actually a hygiene factor. The companies should be able to meet their sustainability targets as set out in their sustainability framework. I'm happy to share that OCBC has pioneered this initiative in Malaysia when we structured the world's first Islamic sustainability-linked financing for Azuar Group way back in 2020. And just recently, at the end of last year, we also structured a sustainability-linked bond for Family Group, the first of its kind in Malaysia. Moving forward, especially when sustainability agenda is no longer something that is nice to have, but instead a must, meeting sustainability targets should be seen as a BAU. Hence, failure to meet should be subject to penalty that is higher cost of funding. Can I move to the next slide, please? I will move on to talk about the global trends that all of you should be very familiar with as well. Firstly, let me look at climate commitment. While most of the multinational companies have already made net zero commitment, I think it's mentioned by one of the speakers just now, we foresee that regulatory shift is focused on greater disclosure, especially on the actual emission of these companies and the decarbonization initiative undertaken together with the outcome that needs to be measurable. This has led to the introduction of the Science-Based Target Initiative, which is a collaboration of various bodies, including the United Nations Global Impact and the WWF, that provides companies with a clearly defined path to reduce emission in line with the Paris Agreement goal. SBTI is actually funded primarily by NGOs such as IKEA, and EPS Foundation, among others. And maybe I just put a pause here. Can everyone hear me clearly? The key significance is really to complement the efforts by various bodies which focuses on taxonomy for sustainability by applying science-based measurement to ensure accurate and standardized approach of measurement on the decarbonization initiatives. To date, more than 2,300 companies globally have joined the SBTI, including 9 companies from Malaysia. We are glad to know that Bursa, whom OCBC has also signed MOU with to progress the sustainability agenda among PLCs, has also led the pack to be a signatory. 2 of our clients, Aziata and Sunway, as I mentioned just now, are also among the initial signatories for this. Next, I will move on to talk about transition finance. I think you may have seen a lot of headline news about this, particularly in the European market. As the name suggests, can you please move back to the previous, thanks. As the name suggests, transition finance aims to facilitate the shift in the company's underlying strategy from brown to green. And typically, sustainable finance will be raised by companies that come from heavy polluter sectors, such as oil and gas, fossil fuels, among others. This product is not without its own set of controversials, as you may recognize. Many pure-play ESG investors have been known to shun such issuances in the past due to the risk of greenwashing. One example is actually Repsol, a Spanish oil company which became one of the first oil companies to issue green bond back in 2017, but was heavily criticized by investors as the proceeds back then was actually utilized to finance its refineries. The bond was subsequently delisted from most of the green bond indexes globally, but they managed to bounce back. In 2021, Repsol returned to the sustainable finance market and successfully raised Euro 1.25 billion sustainability-linked bonds, which garnered strong support from global investors after it managed to come up with a comprehensive transition framework, and the investors were happy with it. I think the next big agenda is really transportation. Obviously, transportation is actually the major contributor to global carbon footprint. About 24% of total, GHG emissions. And during the recent COP26, the declaration was made by the participating countries to sell only cars and vans with zero emission by 2040 or earlier. And the IMO, which is the International Maritime Organization, has also set a target to reduce carbon intensity of international shipping by at least 40% by 2030 and very aggressive target of 70% by 2050. I'm happy to share that green mobility is also OCBC's key focus, and we have recently granted a sustainability-linked loan to a Taiwanese bulk carrier for the construction bulk carriers. Again, this is actually a target, or actually a benchmark against the other important topic is really carbon exchange, which I believe has also been covered by some of the panelists as well. The trading of carbon credit has gained strong momentum over the years as part of the initiative to obviously gradually reduce the overall carbon emission, as everyone is aware. And while European countries have already set carbon exchange many years back, China has just recently started in 2021 their very own exchange, which is touted to be the world's largest national carbon trading platform. Understand that it has involved more than 2,000 companies in the power sector. We are looking forward to our own carbon exchange, as mentioned by Tan Sri Wahid and Datuk Said Zahid during their opening address. This is definitely an important tool for companies which cannot achieve net zero target by merely focusing on their operational efforts. In fact, even financial institutions have started buying carbon credits to achieve carbon neutrality. I think as of yesterday, if I'm not mistaken, we announced that we were already carbon neutral by last year, and that can only be done by buying carbon credit. Carbon exchange, however, is not spared of its own controversy. When an agreement was achieved during the COP26 to come up with a new standardized set of rules, it came under heavy criticism, especially from the NGOs. One of the key issues of concern is that the new rules, which allow even countries to trade the right to emit greenhouse gases, which is seen to weaken the overall effort to reduce emissions. The key question raised is that as climate change has accelerated over the past decades, why do we encourage emissions trading if everyone is going to try to go to net zero? I guess it falls back to the difference between setting carbon net zero versus carbon neutrality targets, which is still highly debatable on which is an appropriate target. But I suppose, given the transition that we are going into, a step forward is better than not having any step forward at all. So I think with that, I would like to end my presentation, and apologies if it has been, disrupted by not so good connections and all that. Thank you. Back to you, Datuk, moderator.
Thank you, Ms. Tan. I hope we can hear better. Can you all hear clearly from the presentation? Huh? If you can do something about that. We have another two more speakers. One more is also taking on virtually and represented by two major banks in Malaysia. The next speaker we have is from Maybank, and he is Mr. Shahril Jimin, who is the Chief Sustainable Officer from Maybank Berhad. Let's see what is his take to share with us with regards to the opportunities and challenges on sustainability, finance, and investment. Pass over the floor to you.
Thank you. Thank you, Datuk Mazna.
Bismillahirrahmanirrahim. This is better. We can hear better now.
Thank you, Datuk. Yes. Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon, everybody. Thank you to KSI and the Economic Club of KL for inviting Maybank to be part of this event today. It is obviously my pleasure and privilege to be part of such an esteemed panel. Can we go to the, I just have about 3 or 4 slides, Datuk, and just to share a lot of context has already been given by Datuk Noripah and also Chin. I'm just going to talk about what we do in Maybank at a high level, what is the role that we're playing, and also what are the challenges that we see within the sustainable finance sphere. If you can go to the next slide, please. So, Encik Arshad Ismail of Bank Pembangunan said it this morning that as financial institutions, as banks, we have a major role to play in the sustainability agenda. Absolutely so, because we are aware that as a bank, we actually have the power. We have the power to move capital in the right direction, away from harm to the environment, away from harm from social degradation to progress and social development. So that's a big thing for us within the financial industry, within banks, and as a homegrown Malaysian bank operating regionally, we take that role very seriously. So ultimately, it's also about what we do and what would be our key role in finance, which is the allocation of funding to its most productive use. But we like to also say that it is not just about the finance, which a lot of effort is going towards addressing climate change. And a lot of the conversation that we've been having today is about the E in ESG. And when we talk about environment, particularly from a Western narrative, it tends to take a very climate-centric conversation. So we are very aware that we need to make sure that we play our part in addressing all the social issues and at the same time making sure that our governance is in place. So Maybank early last year, had announced these 4 big commitments following our AGM last year. And these 4 commitments came about after we set in place a new corporate strategy called M25, which embeds sustainability as one of the 3 key priorities. So for the first time in Maybank, sustainability is part of the corporate strategy, and it is not a standalone initiative, which is very important because today, since last year when we launched the M25 corporate strategy, we are taking sustainability as a business transformation. So within my office, I have a PMO who are running all these sustainability initiatives. There are about 180 detailed implementation plans that the PMO is working on that will run over the next few years. At the same time, therefore, we have made a few commitments, these 4 commitments, to ensure that we are walking the talk and that we are putting our money where our mouth is. So the first commitment is about us mobilizing 50 billion ringgit in sustainable finance by 2025. Not a particularly huge amount by Western standards, particularly as we know for sure that to achieve the UN SDG goals, there is presently a gap of 2 to 4 trillion US dollars. But we play our part, yeah. So we play our part as a Malaysian institution. I'll go into a bit more detail after this, what that 50 billion ringgit of sustainable finance entails. The second commitment is where we want to ensure that we support the communities that we exist in. So we have made a commitment of improving the lives of 1 million households across ASEAN by 2025. And we have started this already last year, particularly through 4 activations. Firstly, through the work that Maybank Foundation is doing in all the 10 ASEAN countries. Secondly, through innovative deployment of zakat in all these countries. And thirdly, through mobilization of effective and efficient low-cost solutions through our community financial services, things that will include provision of low-cost funding for low-cost homes, purchase of low-cost motorcycles to allow people to conduct business and so on. And the third and the fourth activation of this is through insurance as a social security net. So we have just in the last 1 year mobilized about 200,000 low-cost group policies across the region to enable people to be financially inclusive by way of group insurance plans. Commitment number 3 is the big one, and that this is where it relates to the environment. It's about achieving neutrality of our own emissions by 2030 and achieving net zero by 2050. We do not just make that commitment, we are ensuring that we are working towards it. Many organizations have made such commitment, which is important, which is a first step. But at Maybank, what we are presently doing, we are in the final stages, and it's quite interesting what we're doing, because we are calculating the entire finance emissions. Basically, we're looking at our entire portfolio, our entire loan books, and calculating what we call category 15 of scope 3 of the greenhouse gas protocol, and which is the lending to all our customers and what that means in terms of emissions. So therefore, we will have a good baseline to work on. We know for sure how do we then have an implementation roadmap and transition towards net zero. And the final commitment is about our own staff, Maybank. How do we contribute effectively to sustainability? And we have made a commitment of contributing 1 million hours for our 43,000 staff globally. If you can go to the next slide, please. This is what it means for us. Not terribly strange. I believe all our colleagues here as well within the financial industry does this. The 15 billion ringgit sustainable financing is a year-by-year approach. We have broken it up year by year. And what I like to say that last year when we announced this, we also went to the board and we sought board approval to translate this into KPIs for firstly our group president and CEO, then went down to the group as co-members, and now is throughout the organization. So sustainability commitments last year made up about 5% of the KPIs or balance scorecards of our staff, and we have increased that this year for 2022 to about 20%, which reflects the seriousness of our agenda. We will therefore be rewarded if we do well, in other words. Just the next slide, if I can just take all of us. I did say I would like just to talk a little bit about the challenges in this area. So when we talk about challenges, what do we seek to achieve? What therefore would be the successful or the necessary characteristics of a successful sustainable finance market, right? We look at it from 5 different perspectives to ensure that we have the necessary characteristics for a successful sustainable finance market. Number 1, investors increase their demand for sustainable securities. Number 2, issuers increase the supply of sustainable securities. Thirdly, investors become more easily identifiable and can compare sustainable securities. Number 4, investors are better able to invest in sustainable securities. And number 5, market participants trust in the sustainable finance market. So that's how it should look like in an environment where sustainable finance is able to be delivered in a much better way. So, but there's a lot of challenges there today, as we can see. Challenges from the supply side, challenges from the demand side, challenges from the infrastructure side. So from the supply side, there is a misalignment of incentives to participate in the sustainable finance market. So we see strong investor demand, but insufficient supply of sustainable securities to meet this demand. But this is largely due to the significant barriers that small and new issuers face in issuing sustainable securities, which include insufficient market infrastructure or involvement in regions that lack capital market depth. On the demand side, on the other hand, while sustainable finance remains oversubscribed, unstructured information leads to difficulties in making informed investment decisions. So there's a lot of parameters we're looking at in terms of information, supply, demand, and the uneven maturity, especially in the pace of development across the regions that we operate. Some of the regulators are a bit more advanced than others. We are aware of that. So these are the things that we are working on. So for example, although emerging and developing economies have smaller sustainable finance market, they have strong sustainable finance ambition and growth today. But in 2020 alone, China alone accounted for more than 80% of social bond issuances, whilst 82% of the global sustainable fund universe is led by Europe, and it's by far the most developed and diverse ESG market. Pretty uneven, considering the countries that need it most don't have access to that. So there's a lot of challenges. I'm sure we will have further discussions after this. At the same time, a lot of regulatory frameworks have come up. Next page, please, my last slide, that we are trying to balance across the region, even within Malaysia. Can we have the next slide, please? You see there across the region, a lot of it is still very new. For example, in Malaysia, Bank Negara came up with the CCPT, Climate Change and Principle-Based Taxonomy, only on 30th of April last year. And towards the end of last year, 2021, 27th of December, during our Christmas or year-end holidays, Bank Negara came up with the climate risk assessment, scenario analysis, exposure draft, and other jurisdictions about the same level. Singapore is a bit more advanced. We are going into stress testing and so on. But a lot of things are still happening. It's still a very fluid situation. So whilst we do have all these challenges, a lot of things that we are addressing on the table, and there'll be more to come. There'll be various other taxonomies, whilst at the same time, we're still struggling, trying to find some uniformity in our work. So, Chairman, Datuk Maznah, thank you. So that's my short presentation.
Thank you, Shahril. But looking at the current pandemic that we are chasing, I hope we can, fast track this sustainability program. And he have highlighted in his presentation the challenges regarding the misalignment of supply and demand for sustainable financing and securities. They also touched a little bit on the uneven maturity and pace of development across countries and geographies, also sustainable finance for products and assets under management, also, and industry cuts across industry sectors. So transiting the clients towards more sustainable practice is a challenge, and hopefully Malaysia can advance very quickly on that, having lost almost 2 years in this pandemic. So the next speaker and the last speaker, we have Mr. Gurdip Singh Sidhu. He's a Group Chief People Officer and Group Chief Sustainability Officer for CIMB Group. Let's hear what he has to say from CIMB point of view. Please.
Thank you. Thank you. Thank you, Datuk Maznah. Thank you, KSI Economic Club and everyone here for organizing and welcoming me to this. I must say it is quite refreshing to be back speaking or being involved in a forum or seminar like this. Of course, the size is modest, but compared to the last 2 years where things have been very fully online, it's good to have this hybrid event. So if I may have my slides up as I kick off. I was trying to think what more to add to what all of you would have heard a lot of in the course of the day, and being at the tail end of this panel, my friends and colleagues would have covered many things. So let me try and adjust where I can to bring some additional perspectives in some of these topics. I think I can try and, can this work? Sorry, can you just go back to the first slide? Okay, so I always, no, sorry, next slide, yeah. So I always like to maybe kick off with a bit of context, right? And I really feel that it is the right thing at the right time. Many people, and I was very intrigued with the presentation by Shell earlier, it's safe to say that many companies, many countries, many stakeholders have been really ramping up this area and the action and the conversation on sustainability. What is really driving that? I think there is a convergence of realization, a convergence of stakeholder actions that's happening, and that kind of starts with the sort of most macro, right, which is what are the governments doing, our own government, reinforced and in fact strengthened some of its commitments at the COP26, vis-a-vis reducing emissions faster, adding things like methane control, and then more importantly, as mentioned during the course of today, we ourselves here in Malaysia have experienced firsthand, for those in the business sector, Datuk Noripah touched on the ATA, Dyson situation. We went through floods that was a bit of a wake-up call in a lot of ways for many of us. So, whilst we have a lot of this adversity around us, the silver lining that is coming out is it is forcing most stakeholders to essentially rise to the occasion and put action plans in place. The second point is, something that maybe 5 years ago, people couldn't get their hands on, how big is this as an opportunity? Is there really a demand that is going to come? And, whether we like it or not, many business people drive choices based on business opportunity, right? And sustainability, I think, is at that, if you like, pivot now, where it is not just about doing the right thing, it is also about harnessing a lot of opportunities. And in this regard, something earlier this year or late last year, I think, that, I attended this sharing by WWF when they produced this report on the pathway for Malaysia. Actually, we in Malaysia are fairly fortunate, right? Compared to many countries in the world, we have a pretty good carbon sink, right? In the form of our forestry and everything. And so, the to-do for us, compared to many other countries, to achieve things like net zero is actually if you like, a smaller ask compared to many other countries. So that's actually a positive. The other interesting trend, and when we started looking at sustainability very seriously in CIMB about 3 years ago, we think about all our stakeholders, right? And Datuk Noripah talked about the investor lens. Clearly, the investor lens was a big lens. Then, of course, society lens was very important. But increasingly, even the employee lens and the customer lens is also very interesting, where people really want to associate increasingly with doing the right thing and doing good. So, there's many surveys and research out there that talks about people willing to pay a premium for sustainable products. I'm sure, maybe some of you here, when you go for your grocery shopping, some of you make those choices daily, right? We choose to buy things that maybe, if you like, more expensive, but because it talks to us at some level in terms of, doing the right thing. And then coming back to the financial sector, where we are all part of, or at least CIMB and many of the folks on the panel today, there is really a lot of collective action happening, right? So you've got the net zero alliances, the NZBA, Net Zero Banking Alliance, where CIMB is the first bank in ASEAN to join that, and now I think others are joining. So we are doing our part to plug ourselves into the global groups, the global associations, to ensure that we are learning what others are doing, but importantly, we are also addressing and making the right commitments. I think high growth, I don't need to repeat because there's so many data points on this, and I think my fellow panelists have touched on this. It's safe to say that you know, if you were an investment person looking to catch the next wave of things, it's safe to say that there is a lot of demand, whether driven by inherent capital expenditure or on the investment side. Next slide. So when the topic of today's panel, we talk about opportunities, we talk about challenges, right? So let me try and see if I can add much on the opportunities. So I think generally we look at it as a bank, we look at our business as two parts, right? We look at our corporate and commercial business, so i.e. Businesses as our clients, and we look at individuals as our clients, right? So what is happening on the business front? And business, you can look at it as large corporates, you can look at it as medium and small enterprises, right? So I think the opportunity is multi-pronged actually. So if you look at it from the business side, there is definitely an opportunity to help finance transition, right? And transition in itself is such a big topic because you can talk about it from, you know, very different lenses again, but, you know, switching, as we talk about commitments on scope 1, scope 2, for many corporates and companies, they themselves will need to be more energy efficient, for example, and many of those things will require investments. So how do we fund those investments? And really even adjusting infrastructure for them, right? I mean, if you think about manufacturing, the reliance on water in many sectors is actually very high. Is that something that they can take for granted for indefinite periods, right? So companies may need to invest in infrastructure to essentially adapt the way they produce and the way they manufacture. Financing and innovation around financing, you know, we talked a lot about carbon trading markets. I'm a big believer and very interesting that, you know, if I relate back to my early days in CIMB, which was 2006, 2007, back then we were talking about, you know, Kyoto Protocol and carbon credits, the CDM mechanism. And at that time, it didn't take off, right? It didn't take off in a big way. Of course, there were projects in certain sectors where things happened. But I really feel that, again, the tipping point in Malaysia will happen in the next, I would say, 24 months, is my sense, next 12 to 24 months, when the carbon market takes shape and people really start understanding the carrot and the stick. I mean, humans and all of y'all here are decision makers, business people. At the end of the day, we are driven by carrot or stick, largely, right? What is the carrot to do the right thing, and what is the stick to do the right thing? Or what is the stick to avoid, you know, to not do the bad thing, right? And I really feel that the carbon markets will make a big difference to drive that. And then as you go down, you know, large corporates to medium to smaller, it's safe to say that, you know, the smaller companies, unless you happen to be in a green sector yourself, you may not have the capital and the scale to justify having sustainability divisions or departments in the company, and it's not there yet, right? It will come for sure, but it's not there yet. So for this group of smaller companies, they really need to latch on to what we call kind of ecosystems and programs that people pull together. So again, you know, it's not just banks who do this. You know, large companies across their supply chain can do a lot of things, right? And I think we saw that in the session where Ivan talked about it at Shell. And likewise, you know, banks are quite interesting in that sense that we are a little bit of a catalyst, right? We are a catalyst to get our clients to do this, and we are there to help them do it. On the retail side or the individual side, I think, you know, OCBC colleagues talked about, you know, the green cars and the transportation side. So there's many things, right? And things that, you know, a lot of people woke up to and realized that they didn't have flood coverage for their homes or for their cars during the recent floods. These are very basic things that we need to do: educate clients, get people to either incorporate this automatically as part of their coverage, or at least encourage people to do it. There is still a big social angle, as mentioned. A lot of the conversation in sustainability today is still quite centered on the E, I must say. But increasingly, if we look at financial services, a big part of sustainability actually is on the S. And it is really around helping the marginalized, helping the B40 in Malaysia, and across ASEAN, helping the under and the unbanked. And then, yeah, of course, some of this has been sort of made worse with the recent COVID pandemic. Next, please. So we talk about challenges, and Shahril talked about this from, very similar points, I think, to what Maybank shared. But I sort of look at it and I say there's three things that is maybe holding us back, right? One is really the leveling or the level, creating a similar level of awareness and alignment of the roadmap, right? For many of you, again, who work in big companies, you would know that, yeah, you have a big strategy, you have a clear roadmap, people execute, right? In a country, similarly, right? We need a clear strategy, a clear roadmap, and execute, and everyone plays their part. So I think the commitments at the top is fantastic. So it's clear we are going to net zero as a country. Bursa is taking the lead on the carbon trading. Bank Negara and SC is doing many things to drive standardization and on taxonomies and all of that. So I think, again, I'm hopeful in the next 12 months, we will have a much better common point of view of the roadmap for all of us in Malaysia, right? And our role in that roadmap. So I think that has been a bit of a challenge in the past, but I'm optimistic that we are moving in a good direction. And then, of course, we talked about, I think Ernst & Young talked about, data platforms having common access to data, and that point was very correct by Arina, where, if everyone discloses their footprint, then that solves our headache as a bank, because our headache as a bank is to solve scope 3, and scope 3 is your scope 1 and 2. So if you guys disclose your scope 1 and 2, then we get the complete picture faster, right? So so clearly, there is role for aggregators, there's role for government, there's also role for parties who are keen to build this as a business and build this, what I call central data repository for climate-related data, and that can be very helpful. The final challenge is, again, as I mentioned, carrot and stick, right? So, in a bank and bankers, I'm sure everyone has an opinion on bankers. Bankers are quite driven by carrot, right? Generally, our bankers are driven by, okay, so how easy is it to sell this loan, or how easy is it to get this business? And all of that. And one of the things is that, the risk familiarity and the average familiarity in the bank to assess risk in some of these green sectors is still actually quite early stage, right? So it's not deep enough. And at the moment, there's no capital differentiation. And what I mean by that is there is no, if you like, additional incentive per se on the way capital is looked at when it comes to green versus brown. So this, again, as I understand it, the regulators in many markets, including ours, are looking at it. And I think this can also make a difference as we sort of, line up all the different, if you like, catalysts to help us get there. The next couple of slides to close off on my part is just to, briefly share how we look at it in CIMB. Next page, please. Like many banks, I think, again, Maybank talked about this. Sustainability is a core part of our Forward 23 strategy. I'm not going to talk about our strategy per se here. So next page, please. And these are some of our headline commitments that we made, broken into three main categories. So one is really on ourselves. So achieving net zero operationally, which is scope 1 and 2 by 2030, net zero across all three scopes by 2050. And on the responsible banking pillar, we have two roles as a bank, right? We have a role to minimize harm, and at the same time, we have the role to maximize positive impact. So minimize harm is, of course, the very more sort of, well-covered area on coal. So we've made a commitment to exit coal totally by 2040, not taking on new coal effective now, and we are basically putting, rolling out and going live with our NDPE, or no deforestation, no peat and no exploitation policy. And on the positive impact, we are focused on propagating sustainable finance, and we're looking to do 30 billion of that. And then on social impact, again, broken down into our CSR dollar commitments, as well as the volunteerism of our people in that on an annual basis. The final part that I thought I'll leave everyone with, next page, is how do we then, take these targets and how do we then translate that to action at the front, right? So the way we look at it is, out of the 17 UN SDGs, we as a bank we choose to focus on 7, which we feel we have a material role to play in helping. Then we effect change through our products, our services, and the advocacy work we do. So products, there's many things, including our sustainability-linked loans. So we've committed to do 3 billion on that. Some interesting ones that we've done, tying pricing of the loans to achievement of sustainability-linked targets by the clients. So that's moving quickly. On services, tend to be a bit more focused on the social lens. So it's on affordable or some of the COVID-related support. And last but not least is the advocacy work, right? And I've heard that in the sessions earlier today. This is certainly not an area where, we as CIMB want to do this alone, because we will have very minimal impact, right? This is a space where everyone in the industry ought to be a part of it. And so we do our part to basically help different groups and work with the UN, work with industry groups, whether for SMEs or others, to essentially create that grouping to raise the awareness fast enough and to also then support people in taking those next steps that are logical. So maybe with that, I will end, and happy to take any questions. Thank you, Datuk.
Thank you very much. We have 4 distinguished speakers. In the interest of time, I think we got about 5 or 6 minutes left before the next session. And I'm sure there are burning questions from the floor. So if we can take a couple of questions to the panelists. Is there any? Okay, please, thank you. And you can direct the question to which panelist we can answer.
I'm Nasrul. I'd like to direct this question to Datuk Noripah. We talked about the importance of ESG, and you've taken the investor lens. What is the weightage in the investment decision-making when it comes to ESG? Are institutional investors happy with the sustainability leadership and actions of the top Fortune 500 companies, such as Walmart, Amazon, and Apple? Are these 3 companies, which are on the top 3, of the biggest companies in the world, on the Fortune 500, are they even in the first quartile of the sustainability matrix? And if they were unsatisfactory, are there implications to their leadership, to the board and management? That's all. Thank you.
Thank you. Datuk Noripah, can you answer that, please?
Thank you, Datuk Moderator. Can you all hear me?
Yes, yes. Be brief and
quick. Thank you. Thank you. So there's 3 questions there. The first question is on Fortune 500 companies like Walmart, Amazon, and Apple, whether they are providing leadership. My answer is that these 3 companies especially is under microscopic eyes of activists. So ESG has gone wrong. If I actually just started to look into stories on them, Walmart fires women with Down syndrome, and they now have got to pay 125 million under human and labor rights breach. Amazon, for example, you actually have been very comfortable them delivering your pillows with all the plastic wrap. The plastic wrap of pillows, if you actually join it together and go all around the world, apparently it can wrap the earth 500 times. And Apple is doing business at the expense of environment, and Apple and other tech companies are fighting to keep devices very hard to repair. So you actually, if you notice, you actually have to throw that gadgets and buy a new one. The second question is on whether they are all on the on the first quartile, I have to use Arab best S-ray scoring as an investor. No, they are not on the first quartile. If I look at an environment, average, the average for environment is 48 and the average for governance is 52. Walmart is 54 and 45, so they're below. Amazon is 47 and 41, so they're below. Apple is 54 and 47. So most of them are actually below average of the Arab best S-ray scoring. And out of 8,270 global companies that's been rated, they are on the second quartile. But you know what? There's a few Malaysian companies in the first quartile. And proudly to say, Top Glove is in the first quartile. The S-ray score shows an excellent 65.46 for environment and governance 62.27 against an average of 48 and 52. The last question is on, has there been any cases on board directors being removed by institutional investors if they do not comply with board sustainability governance? Yes, I can take one quickly. I can take one global case, but closer to home. It's a historic case. We have got the chairman of Shell here. This is a case on ExxonMobil 2021 AGM, and activist hedge funds that only own 0.02%, not 0.2%, 0.02%. They actually win 2 board seats through the backup of collective investors by not reinstating 2 new board members of ExxonMobil. So the activist shareholders nominated 4 new directors. 2 activist directors won. So the news says they are backed. They're actually backed by BlackRock, the largest shareholder in the world. So the message to ExxonMobil is, hello, you are slow to change ways, slow transition to tackle global warming. And one of the 2 directors that was not re-elected was our Malaysian, Tan Sri Wan Zulkifli Wan Arifin, our former president, CEO of Petronas. He was the first non-American appointed on the board of ExxonMobil. He was on the board for only 4 months, but it's not his fault. It's just that the activists are very impatient with ExxonMobil. And from this, you can see that after that, there's a number of AGM in US and Europe that also wrangle through the shareholders' choice of activist directors at the AGM. And I say this because these are all public information. Thank you.
Okay, thank you, Datuk. Any more questions? We can, if not, just a quick one now for Madam Tan. Based on what we have shared with us, in your view, what else do you think the government and the regulators could do to bring this sustainability financing to the next level? Because it's a long and tedious journey. You know, it needs to have also the regulators' input. Can you share with us your thoughts on that, Ms. Tan?
Yeah, thanks, Datuk Moderator. I think certainly they are, I mean, if you look at actually the growth of sustainable finance, you can actually draw similar pattern from how Islamic finance has actually evolved as well, right? And when we first started Islamic finance in Malaysia, the key initiative to actually ensure that Islamic financing instruments are more cost effective compared to conventional financing is actually by having some various tax incentive and financial incentive for this product, which the government has actually come up with. So with that, actually, you know, the Islamic finance has be grown, you know, from strength to strength. But key issue is how would the government be able to fund this initiative if there are incentives given to sustainable finance? Well, one way to potentially make a profound impact is to consider carbon tax, as controversial as it may be. I think one of the panelists also mentioned about carbon tax. As I have mentioned earlier, I mean, carbon trading is not seen as a last resort under a net zero approach, but let's say it could be a useful tool to be used in the interim during the transition towards a true sustainable model. In this manner, we are making sure that the funds are recycled from those who are making negative impact to the environment to instead provide incentive to those who can actually pollute less and invest in low carbon technology. Yeah, thanks, Datuk.
Thank Thank you, thank you. Just a quick one, last one for since you are here, you better make use of your time. I was thinking to ask you this question: what can be the role of independent board members in ensuring sustainability in the bank's business model? Because I see that you have got quite an extensive, plan there.
Thank you, Datuk.
Yeah.
Thank you. No, so I must say that, my board members are not here, but I must say that in our case, the board members were, I would say, more passionate about sustainability than some of my colleagues in management. So that was an interesting starting point. We had the benefit, of course, of some experienced board members, one in particular who's Australian and who's gone through this journey. So the role of independent board members, so in our case, I'm not sure about all organizations, so we have a specific board subcommittee on sustainability, led by a senior independent board member, Ms. Teo Siu Yin. And so that drives, if you like, the strategy and the priority setting, and also, even like policies. So we talk about human rights policy, we talk about NDPE. So there's an active role for independent board members, Datuk.
Okay, good, thank you. One last one, I have to be fair to all of them. One question to Shahril. Yeah? The pandemic is a systematic risk, yeah? Would you see the sustainable finance and sustainable be a great reset for the industry? Yeah, a quick one or two. I have to be fair to ask all of them.
Certainly, it has forced all banks to rethink how they operate and how they reach out to their customers, and in many cases, even force people or organizations, banks, to rethink what they stand for. Right. So certainly, and I think it has given us a good vision of what can really go wrong. You talk about 1 in 100 years events. Now all our risk appetite statements are being reviewed. We are looking at all the sectors that we have in Maybank today, and we're coming up through what we call a Scrum process. We're reviewing our industry positions. We're coming up with new risk acceptance criteria that infuses ESG considerations that will lead towards even the credit approvals. So yes, certainly the COVID-19 situation, pandemic, has forced us to rethink how we look at infusing ESG considerations in everything that we do.
Okay, so thank you so much, panelists, and ladies and gentlemen, we shall end this session. Thank you very much, distinguished speakers. We'll take our seat now. Thank you.